Now, social capitalist Chamath Palihapitiya, he joins us once again on the phone.
Hey, Scott, how are you?
I'm good. Thank you for being here. Hope you've been well and safe and healthy since we talked to you last. So we've had a tremendous move off of the lows since we saw you last. And you spoke of an environment which was coiled up for a bounce. Are you surprised that we are now where we are?
Not really, because I think that psychologically what we had gone through in that moment, was basically coming to a reckoning around the amount of risk that people had and the lack of preparedness that they had for this kind of volatility, because we had, basically seen no vol up until this period. But really all we did when we tested the lows was allow people to essentially unwind a bunch of leverage and be generally better positioned. But, to be clear, from my perspective, what we have not done is trade the news. We've traded the risk. And this rally is effectively our desire to essentially not listen to what I think is relatively evident and hope for the future. But the problem is that hope isn't a strategy. And so much of this rally, I think, is a setup for what happens next. And I think the cherry on the cake was in many ways what the Fed did this morning, which was, to me, dumbfounding.
Why dumbfounding?
What I see actually is like the tale of two pandemics. And if you just allow me for a second, so if you look at what one tale tells you, today we saw 6 million new jobless claims. We think that we're going to have somewhere between 15 and 25% unemployment, so call 20% the midpoint, across every single industry. In the absence of an artificial supply-side decision in oil, we could see an entire industry in the United States eviscerated. We actually are now seeing incremental data that the damage to companies and industries is much greater than we thought. So before it was isolated to tourism or hoteling, but yesterday, for example, New York Presbyterian came out and said they could lose up to $750 million. UCSF, which is a research hospital here in California, said they could lose up to $250 million. Frontline primary care workers have been part of this new class of jobless claims. So this is, people in doctors' offices, dentist offices going out of business. So we are now touching industries that in many ways were responsible for fighting this disease and helping us make sure that we could get back to normal, who are now the first to be affected. So that wave of damage has to really get unwound, and that $100 billion in the stimulus bill looks like it's woefully insufficient for that.
But don't you think there's going to be more? Don't you think there's going to be more? I mean, the Fed basically put it all out on the table today. I shouldn't even say that. Really. They still have more to do, and they will do more, and the government will do more. So as somebody who owns tens of companies now going through this PPP process, is what I'll tell you is I think the results will be pretty haphazard and quite sloppy. The mechanisms in which to do it, the amount of money that's given, the requirements that one's taken, just to give you a sense of it on the ground, what I will tell you, again, the tale of two pandemics, this is just the first tale. On the ground, when you do the math, if you're a company, you actually save more by furloughing people, cutting salaries, and letting people go than you would by getting PPP. And so the difficult decision that many CEOs are being forced to make is how much runway do they want? Do they want to get, a few months of payroll relief, but then be forced to carry folks on longer in the absence and unknowingness of the revenue side of the business that they have? Or do they just let people go, cut burn, and basically save OPEX? That's an incredibly difficult decision. And I think what I'm seeing is many companies choose the latter. And you're seeing some of the best companies in the world deciding to furlough people and let people go. That's going all the way down the value chain to the smallest companies. So that's on one side. That's one part of this tale of two pandemics. The other side is what the Fed is doing, which is essentially is a decision to obscure price. And I don't think that it's a bad thing in the short term to create some amount of confidence when there's massive volatility. But at some point, I think what we need to realize is that unless we want a state-sponsored economy where the government owns most of everything, we are going to have a period when private market participants
or public market participants like myself, like Josh, have the right to set the price. So, for example, if you look at Ford bonds today, I don't know whether Ford is a good business or a bad business. But what I do know is that when the Fed says, I am going to prop this company up and make sure that this sleeve or this tranche of debt, does not basically fall into a place where it's tricky for them, obscures what the real price is that I would pay. And eventually, myself and every other public market participant will have to use all of our collective capital and decide what the true fair market clearing price of these assets are. And I think that is when there's this next wave of damage. And so what you have is you have an obfuscation in the capital markets and a reality in Main Street, and they're not being reflected, and they don't reflect the same story right now.
Okay, Josh, you want to comment on what Chamath is saying? I want to kick this around.
Yeah, I appreciate that point of view about the government obscuring price, but the part I want to push back on is, first things first, from BCA research, we've heard that 80% of layoffs are considered temporary by the employer or the employee or both. And that's new research as of the last couple of days. The second thing is that we're in a war. And in a war, the government directs the war effort and finances it. And so part of fighting that war this time is not jet fighters and battleships and aircraft carriers. It's financial liquidity and medicine. So we're fighting a war on that front, but it's still a war. We still have a citizenry that is at risk of death or serious loss. And so when you think about it like a war, the idea of the Fed and the Treasury stepping in is no different than the idea of a taxpayer-funded military sending soldiers and materiel off to wherever the battlefront is. So I'm trying to think about it that way. It's less offensive. And then the last thing is that we did not lose money in the last round of corporate bailouts. The government made money on the bank investments it had to make, on the auto industry, AIG. Not that we wanted to do it. We were left with no choice. Chamath, there is no choice.
No, I'm not disagreeing with what the Fed has to do. What I'm saying is that it's creating a landmine and it's creating a bill that will have to come due. And I think the point is that in 2008, we had a surface area which was relatively limited. We could contain what the problem was to a specific sector or to a specific handful of companies or to specific holders of specific instruments. This, as you say, is everything in the kitchen sink. It's everybody. It's everywhere. It's all industries. It's all companies. It's all sizes. So unlike 2008, what this means is this is the totality of the United States economy, and it's a large percentage of the world economy. So in that, there is a very simple binary thing that the governments have to do, which I agree with right now, which is to come in and prop up asset prices. But eventually those asset prices, just like in 2008, got priced to market. And in that turn, the United States government and the United States citizens who put up the money, we got a decent deal and we made a little bit of cash. My point is, when you look at how broad-based the buying is here, it just won't be the case because there are some zombie companies that will get propped up. And when all of that gets priced into the market eventually, you're going to see a lot of financial carnage that maps to the actual carnage that's actually happening on Main Street.
Jenny?
Yeah. So I agree with something that Chamath said, which is that we're creating a landmine and the bill will come due at some point. This is something that we've been talking a lot about in-house here and thinking about too. And we've been asking the question, when does the dollar weaken because of this? When does inflation kick in? When does permanent growth become a lot lower? So what we've been talking about, and I'm curious if Chamath agrees with this, to us at Gilman Hill, the way out of this is incumbent upon voters to, in the next rounds of election, be super conscious that we're voting for fiscally disciplined leaders who understand and can start to dig us out of this hole. That might be Pollyanna to think that it's possible. I'm not sure it is, but I think that we all need to recognize that we borrowed a lot, taken a lot. We were getting out of this because of it, but it is on us to be fiscally responsible for the next 5 to 10 years, maybe 20 to 30 years to get out of it.
One of the issues, Jenny, one of the issues in Chamath as well, why should we even be worried about quote unquote landmines at this point.
No, Jenny is totally right. I mean, look, we are headed towards all the worst parts of Europe without the best parts. You know, it's all bad teeth. It's no good food and architecture and long vacations. I mean, Europe for years has decided that they're just going to prop every random company up. They're never going to allow anything to fail. You know, the ECB will come in and buy debt and credit. I mean, it's ridiculous. And you've seen what's happened to the Eurozone, which is basically a slow decay to irrelevance and essentially a quasi-socialist continent. And so we have to decide what we want to see, you know, and some form of austerity may be required after this period of flagrant spending. You know, just to build on her point, we have just started to figure out the damage to states and municipalities. This is why the Fed today said $500 billion to support states and munis. But we know that that's not going to be enough, because if you go state by state, city by city, county by county, what you will have is a very, very difficult political problem that these mayors and governors have, which is the following. This is the one chance, and the Fed just signaled it, for them to get a massive bailout. And so if you're running a city and you have unbelievably large unfunded pension liabilities, your revenue has fallen off of a cliff, you have no idea how you're going to provide essential services, this is the moment in time to delay your ability to go back to work, to delay the way that you end the shelter in place, solely because the damage will be incrementally worse, which means you probably have a better chance of being a little bit further in line, ahead of the line to get a bailout. And so that is an entire panoply of issues we haven't even started to touch. You know, we've talked about Delta Airlines or American Airlines or Carnival cruise ships or whatever. But what about the city of Houston, the city of Pittsburgh, you know, the state of Arkansas?
Those are going to be issues. I hear you on all of that, and those are going to be issues that need to be dealt with. I'm fairly confident that there's going to be more money, regardless of the landmines, if you want to use that word, that it creates down the road, that the right people are in place thinking about the very issues that you're talking about, Chamath, and that there is going to be money funneling to wherever it has to go. There is no alternative.
Scott, there is a basic principle of capitalism, and maybe this is what we're getting to, which means at some point, you and I have to agree what the market clearing price is for risk and for an asset. And right now, what we have decided to do is pause that process. And at some point, all I'm saying is we will have to restart that process if we intend to have some form of capitalism in the United States.
And we'll have a better idea, ideally, once the economy not only opens, but once you get further down the line where you can actually start to put some real thought behind what earnings are going to be and the multiple that you want to put on those. Right now, obviously, because of the unprecedented situation that we're in and the level of engagement of the government and the Fed, it has done everything that you've said. It has obscured price on a lot of things. But that's just...
But it's not obscuring the damage. My point is the damage is still happening. This is why I'm saying it would be one thing if what we were doing is literally cutting checks to humans. And that's all we did. Meaning there would be no price obfuscation there. What we would see is probably inflation right out of the box, but at least it would be a consumer-driven rebound that we could think about as highly probable. Then you could talk about earnings and whatnot. But to your point, what we've now done is divorced ourselves from reality. And the more we do these programs, again, I think we need to do some form of this for a while, but the more we continue to do it, we're going to exacerbate the hangover that we have, because it's not going to help as many individual people as you think it's going to help. And all it's doing is propping up asset prices. It would be better for the Fed to have given another $500 billion to every man, woman, and child in the United States.
Well, how is this crisis changing the way you invest, if at all?
Well, the first thing that it's made me realize is that as bad and dislocated as the equity markets are, and what I mean by that is people have just basically said, I throw up my hands in the air. I'm essentially going to be net long. I refuse to think about earnings. I'm going to assume that it's a 1 or 2 quarter aberration. So I've decided to basically step out of the equity markets in the public side for the time being, because I think they are not reflective of what's happening on the ground. Where there is more reality is in the credit markets and in private markets. And I'll give you an example. 2 days ago, there was a transaction where Slack, where I led the Series A, and we took it public last year. We did a convertible bond issue in the public markets, $750 million, 0.5% coupon, 24% premium on the convert price. And then Airbnb did a convert the same day, $1 billion, 11.5% was the midpoint, 1% warrant coverage at a 50% discount. So you have a price maker and a price taker. What you would say is that the public equity and capital markets essentially allowed Slack to raise as much money on whatever terms they wanted. Airbnb basically, had to essentially go to a loan shark. And so there is a massive dislocation in private markets right now, which is going to create a large opportunity for buyers like me who can understand and sift through different technology companies and what their true cash flow streams over the long time will be. The second, and Josh mentioned this very early on, but there's been this amazing phantom rally in junk high yield. But if you go through the high yield index, what I will tell you is there are an enormous and growing number of zombie companies that will not exist in 5 or 10 years. And again, at some point, the bill comes due and somebody has to price these assets to reality. And even more importantly, all this unsecured debt that has not gone to fund R&D, but has essentially gone to fund paybacks and CEO compensation, those unsecured debts have to get paid back. And the cash flows just don't exist, which means that these companies will go to zero. So in the credit markets, I think that there's an enormous body of opportunities. And in the private equity markets, there's an enormous amount of opportunities where folks like us can be price makers. And the companies essentially are price takers. But in the public equity markets right now, if you have any reasonable way of just saying this is a 1 or 2 quarter aberration, you're going to be given a hall pass for at least the next 9 months, which means that the buying opportunities in public equities are limited to none.
What do you think the other side of this is going to look like?
I really think that this is very similar to what Bill Gates has been saying for a while. If you're really honest with yourself, and if we are really honest with all of ourselves for a minute, what do we know now that we didn't know 2 or 3 months ago when this started? And honestly, what I would tell you is not much of anything. We don't know much more today than we knew in January. We're not that much closer to a vaccine. We're not really sure what the half-life of this disease is. We don't know what the real R0 is. We don't know what the CFR is. We don't know, whether you even express antibodies. If we do, we don't know whether it's reliable. We don't know how long those antibodies last. So, if you really write this down on a piece of paper, the reality is we have the same open questions we had in January.
So to your point, I'm sorry to interrupt you, Chamath. Let's listen to, in fact, what Bill Gates told our Becky Quick this morning on Squawk Box, and then let's react to it on the other side. It plays right into what we're talking about now, and I would like to hear from Bill Gates.
No one should think the government can wave a wand and all of a sudden, the economy is anything like it was before this happened. That awaits either a miracle therapeutic that has an over 95% cure rate or broad usage of the vaccine.
Same point you're making.
He's completely right. And so, in a different way, basically what we're saying is we really don't know much more than we knew back then. And so we're still waiting. We have a lot more hope. We have more optimism. And what we're seeing is the effects of courageous action by our frontline workers. So I think when you think about that, the reality of an economic restart, to me, is much murkier than people think, which is exactly as Bill said. It's going to be very difficult for large swaths of people to congregate and be beside each other, doing tasks, enjoying life for the foreseeable future until we know that either there is a cure, meaning you go to your doctor and you get an injection that'll protect you, or if you get sick, that there's a way with 95%, as he said, efficacy that you're cured. Otherwise, Scott, what I would be telling you is the following. Hey, Scott Wapner, go to your job, do your best. I can't guarantee you that you're safe. I can't guarantee you the guy beside you is safe. If you care about your elderly father or, your brother or sister who's immunocompromised, maybe you work at home if you can. If you can't, just come in. There may be a therapeutic. It hopefully kind of works, but I can't guarantee you that either. And if you die, I'm really sorry, but we tried our best. That's where we are today.
And that's why we're not. That's why we're not going back to work today.
So an economic restart will not, in the next 4 or 8 weeks, address any of those core structural issues. Which is again why I say we're in a point right now where the capital markets are still very much divorced from Main Street. And at some point, we do need to tie these two things back together, because this is how the United States is the most important, vibrant economy in the world. The capital markets should reflect what happens on the ground at companies by people. And right now, it does not.
Sure. Look, I think it's important to repeatedly say, with an asterisk, with a caveat, that this time, this is what has to happen. It would be almost, in 08, we're having this big discussion, Chamath, about, the Fed and their bailouts and this, that, and the other thing, and whether there was a moral hazard. Well, I think you can make the argument that this time it would be almost immoral not to do what the government and the Fed are doing to help make people, in Jay Powell's words, whole, because of a situation that they were forced into.
We're not, let's be clear, we're not making people whole, okay?
But you get the point. You get the point.
Scott, no, I don't get the point. I don't get the point because it's not accurate and it's not fair, and it's basically, treating the American people as if they're stupid. We're not stupid, okay? If you wanted to make us whole, you would basically take last year's W-2 for every single United States citizen and say, guys, I'm going to give you the monthly wages that you got last year until this thing is over. That's how you could make us whole. But by plugging the holes of balance sheets, you don't make us whole. By stepping into markets that none of us have exposure to buying illiquid assets off the balance sheets of banks, you don't make us whole. That is not doing anything for the average person every day. Okay, the average person got about 2 weeks of salary relief. That's all they got.
And they need more.
It's not enough.
They need a lot more. There's no disagreement. There's no disagreement at all about that.
But I'm saying that's been less than 10 cents on the dollar of what's been spent right now. So all I'm telling you, Scott, is that there is good intentions. But typical in form, we are misallocating vast swaths of money. And in it, what we're doing is we're creating a bigger problem that has nothing to do with how people will recover. It has everything to do with how balance sheets are valued, how assets are valued, how net asset values are calculated, how LPs get K1. This has nothing to do with an average person, the firefighter, the policeman, the doctor, the nurse.
Look, I do not disagree with you on that, and we're going to once again have to have the painful and unfortunately too long-lasting conversation of income inequality, and in many ways of what is happening now may accentuate that even further on the other side of this. And I say too long of a conversation because it seems to continually expand without truly getting dealt with, and the unintended consequence of this entire situation that was the fault of nobody is going to be...
I understand. But you know what? Being the fault of nobody is not an excuse for doing the right thing and being compassionate now. So all I'm saying is if Jay Powell is listening, what I would tell him is this. Everything you've done, I applaud. Thank you for doing it. But from here on out, look out for individual people above all others. If the Fed is literally willing to do everything, do things first and foremost for American citizens, one by one, every man, woman, and child. Get money in the hands of individuals. Replace their lost incomes. Don't prop up assets. Don't obfuscate price. It's not going to help anybody. All you're doing is having money wash around the financial system, which is all about hedge funds, banks, large family offices. Guys like me, we don't need the help.
Joe Terranova, do you have something for Chamath?
Yeah, I think that's a great point with Chamath just said. I do think individuals need the assistance. But Chamath, you obviously are painting a narrative that's rather ominous for risk assets. And we as speculators, you and I, we participate in these capital markets. For the viewer listening to you now, when you look across the asset class landscape, where is it that you see the largest richness? And are you taking a position in that capacity thinking that it's overpriced?
Thank you for asking this, Joe. So this is why I think in the credit markets right now, my entire focus has been where are opportunities where I can loan to own, or where can I buy, tranches of debt where I can step into these companies and save them. And my thought is there are some incredible businesses right now that are going to get in very precarious trouble. The odds that, the Fed shows up with a bazooka for every single company in the United States, I think is still low, which means that guys like me can step in and help preserve some really good companies that, frankly, make products in the United States that keep good American men and women employed. And I think that, to me, is where I'm spending my time, because that's what I can do. I can't build a vaccine. I can't find a therapeutic. But I can, shore up a business, make them be more efficient, figure out how to be more resilient, invent new products, keep people employed, hire more people. And so I'm spending a lot of time in the credit markets right now trying to figure out businesses where I can be a lender of record. I can participate in that transformation through this pandemic and help these guys. And I think that's what I can do. It's not a lot, but, I'm going to try my best.
Josh?
I guess I would say to Chamath on the issue of the right way to get stimulus to people, I totally agree with him that it's very indirect to be giving it to small business owners, to keep employees, to give it to mid-sized enterprises, which they talked about today, or to do airline bailout with $500 billion. I completely agree. It takes a long time for that impact to be felt. The problem is that's really the only transmission mechanism we've ever used and we've ever had. And to say that the danger is when we come like Europe, mailing checks of cash to people is the most European thing I've ever heard. So almost which is it? And then the last thing is, I don't like that it's this way, but it is this way. We have built the economy based on the wealth effect. That is the only engine of economic growth we have, meaning there's $5.7 trillion that American people have saved in the stock market, usually 401k and IRA. That money then becomes, quote, institutional money or hedge fund money or mutual fund money. But it's really people's money. And it's pension money on top of that, which is firefighters and nurses and teachers. So it's not two different money. It's people's money that's managed by institutions that's in these corporate stocks and bonds. So I think it's very hard to say that there's a faster, more effective way. I do think that we should be doing more on unemployment insurance. But other than that, I don't think we can wrap dollar bills in brown paper bags and drop them in people's laps. And most of the economy requires stocks and real estate prices and asset prices to rise, because that's what fuels more spending and that's what keeps more people employed. I'm not saying it's good. I'm just saying that's what it is.
Chamath?
Yeah, I'm not sure I fundamentally agree. I mean, the first thing on Europe is the most European thing is what we're doing now, which is we're actually propping up zombie companies. It's not giving money away, because Europe doesn't really do that in as broad way effect as possible. They have good subsidized social services, but they don't just hand out money to people. Now, in terms of how the economy works and this idea that the capital markets are flooded with average people's cash, yeah, it's true. But then there's this intermediary that steps in, which are these ETFs and these large, bulky organizations. These people aren't forecasting. These people aren't thinking about which businesses they need to own. These people are running, low load or no load funds. They own 80, 90, 100 companies, trying to match indices and trying to do that as cheaply as possible. They don't understand company A from company B, so they're not trying to help a company by getting them incremental capital. They're just running a simple business and getting paid for it. And, the people that pay the price, in fact, are the pension funds and individual owners who own products through this level of indirection. This is a moment in time where when you have grave consequences, you have to have strong, powerful, courageous action. We had more technological advances because of World War II, not in spite of World War II. You know, we had great social reform because of the Depression, not despite the Depression. And so Americans have this great ability in moments of crisis to step up and clean off the cobwebs and do what's right and do things that are bold and decisive. And so if UBI was something that we're trickling around today, it's probably something that we need to realize is much more important, because we've always been a consumer-driven, GDP-driven economy. And until that changes, and I would say it shouldn't change, GDP-driven economy. And until that changes, and I would say it shouldn't change, consumers or voters, they're voting for products that win. Customers vote for products that win. We need to make sure that these consumers have more and more capital at their disposal, and they will lead us out. And I think what we need is a political body who's willing to embrace the capability of people like us and people that are watching, and the individual people who are capable of electing people, who are capable of going to war and dying for our country, that we are also capable of spending our way out and figuring out a solution. And so all this indirect capitalism does is it lines money in the pockets of the established masses, and then it indirectly, eventually, 10, 5 cents on the dollar, gets the people that really need it. And I think that it was wildly wasteful and unnecessary.
Let me lastly ask you one more question, Chamath, and I got to run. I want to get into another story. And I think we all agree with you that more money for Main Street is needed. Maybe not in spite of the money to all of these companies or whatever that make up the economy as well. That more money is needed everywhere, perhaps. But are you suggesting, you keep saying propping up zombie companies. Are you arguing to let airlines, for example, fail?
Yes.
Why? I mean, how does that make sense in the broader scheme of the economy?
Because it's not, because when you look at what it means, this is why I'm saying, like, this is a lie that's been purported by Wall Street. When a company fails, it does not fire their employees. It goes through a packaged bankruptcy, right? If anything, what happens is the people who have the pensions inside those companies, the employees of these companies, end up owning more of the company. The people that get wiped out are the speculators that own the unsecured tranches of debt, or the folks that own the equity. And by the way, those are the rules of the game. That's right, because these are the people that purport to be the most sophisticated investors in the world. They deserve to get wiped out. But the employees don't get wiped out. The pensions don't typically get wiped out.
Why does anybody, I just don't understand, why does anybody deserve, using your word, to get wiped out from a crisis created like this? How does anybody deserve to get wiped out?
Well, but just be clear, like, who are we talking about? We're talking about a hedge fund that serves a bunch of billionaire family offices? Who cares? Let them get wiped out. Who cares? They don't get to summer in the Hamptons? Who cares?
I mean, there are people. You don't think the employees? Hold on, Scott. You don't think the employees of these companies own stocks? I mean, own their stocks, own the company's stocks?
You can look on Bloomberg and you can see what percentage of these companies are typically owned by. These things are owned by BlackRock. These things are owned by these huge, amorphous organizations. Ultimately, downstream, and the employee owns a few $100s or a few $1,000 of shares.
Well, I just don't understand. This is like a natural disaster. Why does anybody deserve to get wiped out? Wouldn't that be immoral in and of itself?
No, because what's happening right now is what I'll tell you is on Main Street today, people are getting wiped out. And right now, rich CEOs are not. Boards that had horrible governance are not. Hedge funds are not. People are. 6 million people just this week alone basically saying, holy mackerel, I don't know how I'm going to make my own expenses for the next few weeks, days, months. So it's happening today to individual Americans. And what we've done is disproportionately prop up and protect poor performing CEOs, companies, and boards. And you have to wash these people out.
Well, we're going to continue the debate another day, Chamath. You've always given us something provocative to chew on. You did once again. We'll do it again soon, I hope. Thank you for coming on today.
Thanks, guys. Talk to you soon.
All right.
Bye.
That's Chamath Palihapitiya. We're going to take a quick break. Up next, it's a story that's getting a lot of buzz on Wall